when it is a little bit 50-50 to push to the downside and to push to the upside is when we call it valid setup. I wanted to share the thought process behind GBP JPY and why I opted to go short rather than long, and that will give you a more better understanding of what we were looking in the first place. Now let's start off from the daily time frame. Now on the daily time frame, what I want you all to understand is that we look on the daily time frame with these main two things, only two things. Okay, our goal for looking on the daily time frame is to know first the probability, okay, of the trade setup, if it has a chance of going long or short, or is in a neutral state. So when it has a high probability, we say that's when we have a high probability setup within itself. But when it is a little bit 50-50 to push to the downside and to push to the upside is when we call it valid setup, okay, because it still has a 50-50 chance of either playing out to the upside or to the downside. The second thing that we want into the daily time frame is to understand the chances of price playing out in the direction that we anticipate or that we are anticipating. Are we together? These are the main two things that we always focus on, okay? Understand the probability, if we are going long or short, meaning understanding the direction in general, and then secondly, to understand the probability of that particular trade setup in playing out. And now in understanding that, we use this formula, which is the area, structure, and candlestick. We always look on these particular three things. Now let me start off with the first number one thing, which is the area. Why do we normally look on the area? And in this scenario, why I decided to look on that particular area. Now, the price, in order to make a shift in the market, big shift in the market, it's a must. It's a must. It must break a previous low or high, or at least equal a previous low or high. It's a must. That's why we are looking on area volume. Okay? Because those are the areas that originally had enough liquidity or volume, to put it that simple. So the price needs to go back in those particular areas by breaking below or breaking above, or at least equal into those particular areas. Are we together? Are we together? Now, with that being said, now in GBP JPY, what do we see? We can see these are the areas that price previously was holding. So all these particular areas were the ones that had enough volume. And looking between this one and this one, which is the most lowest low, you will all agree this was the most lowest low. And what do we see the price doing? The price broke that previous low. So we are sitting at a good area volume, and it has done what we are expecting the price to do. That's the first one, number one thing. Okay, it has broken the previous low with momentum, indicating that there is a more selling pressure coming in, because that first candle is bearish engulfing, and then that second candle is in bearish engulfing candle. It means that there is enough volume for the price to more push to the downside. Now, once you're good with the area, you go on the second thing, which is the structure. Okay? Now, when we speak about structure, it means the direction. Okay, it means the direction. Structure means direction. Which direction do we see from the daily time frame is likely more to happen? Is it more pushed to the upside, or is it more pushed to the downside? That's the clarity or level of clarity that you need. So now we know that when the price breaks a previous low or high, we just wait, because sometimes we might see a break above and a continuation forming above that previous high. Then price proceeds in its direction, or sometimes we might see a break to the upside, then break back in, and then followed by a continuation, meaning that a confirmation for the price to move to the downside, right? It's always that simple, right? Right? Same goes. What do we see? If we break below previous low and then form a continuation, that's a clear confirmation for the price to still push to the downside. Or sometimes we might break below and then break back in and start forming continuation on where we broke, and then price just moves. Are you getting my point? Are you getting my point? Now, from this particular piece of information or data that we have, after breaking this particular area, what did the price started doing after breaking this previous low? We can start to see that it started forming a structure which was more of ascending structure, which was acting more as a continuation in this stage. We cannot see it clearly from the daily time, from the daily time frame, but we will see it more clearly on the H4 time frame. So we know that the type of structure that has developed or formed is more of a reversal one, but is more into a continuation state to still push to the downside. So we know it's a clear structure that is indicating that we are likely to push to the downside. Thirdly, we look on the candlestick. Now the candlestick helps us to confirm the direction of our bias. Okay, if we were looking to go long and we know we are sitting at a good area volume, there is a structure supporting that, but we need also the candles to further confirm that. And in this particular scenario, we can see that these momentum candles already play a great role for that. Why? Because we know what is the natural progression of price. It's impulse, correction, impulse. Now, if I tell you that this is a clear impulse, then this is a correction. What are we expecting next? We're expecting the next run to the downside. So we are more into a continuation state. So you will see that the area, structure, candlestick, all are aligning together to move to the downside. Are we together? Now let us move to the H4 time frame to further reconfirm, because we need to know also what is the H4 time frame role. Okay, now when we come into the H4 time frame, the duty for the H4 time frame is to confirm what the daily time frame is already saying in the first place. Are we together? Are we together? So the H4 time frame will confirm what the daily time frame is already saying in the first place. We know the daily time frame is giving us more of a chance or probability for the price to push to the downside. And now if that is the case, then we know clearly that we need to find the reason that will give us a better edge for us to move to the downside. Now let us start off with this particular first scenario. You can see I've set this particular ray line. You can see it all, this one. This is a footprint, or we call it a hook point. Okay, now we can see that the price has approached at that particular hook point in a form of structural approach. Are we together with that? 1, 2, 3, with a clear middle section. Now, which kind of structure is this? This is more of a reversal structure. and after intersecting to this particular hook point over here, where is it likely to reverse? You already know the answer. It's likely to reverse to the downside. So first we can see the price has a hook point, and the price has already approached at that particular hook point. We have a clear ascending structure with a clear middle section, clear touches, confirming that we are likely to push to the downside. And then furtherly, we can see that we have that 4-hour retrace candle, which is giving us even a more better edge that the price is likely to come to the downside. And we know with this particular ascending formation, they normally come back to this previous low, like 90% of it. But the good part is that we see in the H4 time frame this as a single candle, but this is a clear impasse because we can start seeing some indication of a clear continuation for us to push to the downside. So the H4 has already confirmed further to us that we are trading below the previous lows, okay, and the price has already retested on the previous backhand through that particular hook point with a clear structural approach, retrace. And now what are we waiting? We're just waiting for the entry confirmation. Now let's move to the H1 time frame, because the H1 time frame is the one that deals with the entries. Now from the H1 time frame, which I was supposed to show you that even to the H4 time frame, you can see that there is a structure within a structure. Okay, let me just draw that for you. There is a structure over there. There is a structure. Though it's not the perfect one or not the cleanest one, but there is a structure, a larger 4-hour structure. I just wanted to show you that in case for anyone who was likely asking themselves, what about that? I wanted just to put it clear. Now, when you move to the H1 time frame, we always, I repeat again, we always wait for the H1 time frame to give us a confirmation to our entries. Where are we likely to take that particular trade? Is it in H1 time frame? Is it in 4-hour time frame? Or is it in 15 or even some 5 minutes, right? That's the duty of the H1 time frame. In this scenario, I'll explain it to you. So myself, after seeing that I have all the confirmation of the price to push to the downside, supporting the daily time frame, I just decided to opt to jump into the H1 time frame. And into the H1 time frame, it was quite so simple. What I was waiting over here was just that push down and a flag. But the good thing is that this push down was already there, and the price at the midnight was developing into something like that. So I just went to the 15 minutes to see it a little bit, to see if price is likely to develop further. And then I saw there's a chance of price doing something like that, maybe forming even a 3 touch. I went for my midnight prayers and then came back, and then price was doing something like that. And then I opted to just place my entry after this candle. Let me show you. Let me forward the price a little bit. Yes, this one. Yes, after this particular candle, I just set my entry underneath over there with my stop loss above over there. And then imagine what? The next hour, that's what happened. Price did something like that. It was even good because I know this is not the type of candle or weak candle that we need to worry about, because we have wicked through the structure, not to the structure. And if you want to understand or confirm it's a weak fill, from where you saw it, move to the lower time frame below it, and then you see the same exact thing. Do you see it over here? You see the same thing, even if you were just to do something like that, but you still see it's still a volatility candle, right? You still, you still see it that way. So that is why I just saw that as a clear angle, and I was safe over there. And then I was tagged in. Then from there, I went to bed. Price did something again like that. Then in the morning, it was around these particular areas, I do believe. It's when I moved my stop loss to break even. Now, after this next candle, I do believe. Yes, after start seeing this, I just moved my stop loss to break even. Then price started to do something like that, kept pushing. I locked in a little bit of profit by that time. I cannot remember exactly, but I locked around this particular area. It was like 2.5%. And then looking back into the price, seeing the price, seeing the price just impassed and then started to show some signs of rejecting around this particular area. I had to just wait for that particular next candle, and then I squeezed my profit a little bit just over there to just give the price room. And then I was taken out by 5%. It was 5.02% around this particular area, which was in the what we so called this 15-minute candle. This one over here, it's just retraced. Cannot remember exactly because there were no like previous swings and lows like what I normally do, but I was taken out by 5.02% in this particular trade because I saw that we are sitting around these particular areas and there's no need or room for us leaving or lifting the price just to do nothing, and then the market giving you that opportunity and knowing that normally the price normally comes back to these particular lows and then we start seeing deeper correction. So I just opted to be a little bit aggressive, and then I was taken out by 5.02%, which was definitely a good trade, one that I will take it over and over for the reason that I've just mentioned. So yeah, I thought that I could go more into details into this recap so that everyone can really understand and get the clear picture and understanding of the thought process behind the trade. And yeah,